Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host, Joel Elconin, along with Brianna Valesky, and we have Harlan Pyan on the line. He's the co-founder of All About Trends, here to give us his technical take on the market. Harlan, how you doing on this Thursday?
Hey, good morning. How's everybody?
We're doing good. We're doing good. Thanks for coming on here at such short notice. We just had an interview there. We were talking about, the market mechanics of, Manic Monday, flash crash or whatever. Give us your take on that day.
Well, that's the same thing. I think we talked about it last week where, it's the perfect setup. You're going into a weekend. Nervous Nelly is going, I'm just going to hit the sell button. And then it looks like the rise of the machines at the open on Monday, they kind of hit the tilt button on the pinball machine.
Okay, that's a good way to put that. Now we've had a couple, rebound rallies, and I know you like to sell into strength. We've had a couple opportunities too, especially yesterday on the open. Do you think, we're going to get another chance up? I mean, the SPOOs, they spelled out that 1990 level here. Now we backed off it quite a bit, going into a triple witch. Do you think now that we've been up two or three times and failed, you're going to have to lower your sell, your sell points on the if we do get another rally?
Well, it's kind of, you got to sell strength. You buy support and you sell strength. And you talked about scenario analysis. What a great term if you think about it. Every risk manager out there and every defensive coordinator in the NFL is using those tools. What if this? What am I going to do with this? What am I going to do with that? When you line it up with the charts and basic technical analysis, you can see yesterday, all you did is come back up and retest the spike highs from a few days back. And in addition to that, we have a thing called ABCs. And you can see you hit your low, and then you bounce for A up, pull back a little bit, and then for B down, and then yesterday was your C up, and it stalled at a retest of those highs, give or take a few. At that point, given how fast these markets are, don't blink. You just can't blink. You got to take your trade, and that's it. That was your entry on the short side with a lot of names. Now, it's like a tennis ball. Let's just call it the tennis ball market. Everybody stand there, grab a tennis ball, and just drop the tennis ball out of your hand. What happens? Well, you hit the floor, and the tennis ball bounces. But what do you notice about that tennis ball? When it bounces, its high is not as high as where you first dropped the ball. So you see, and then it comes down, and it bounces again off the floor, and it's another lower high. So if you think about it, the scenario of just grabbing a tennis ball and dropping it, you see doom, 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 doom. So that's probably what we're going to see right here. So you got to watch support. And when you get the support, the what to watch for, you got to watch for positive relative strength divergence.
Okay.
So that's what I'm going to be watching for on a retest of the lows.
Okay. So you do think we're going to go down and retest the lows? That was my next question for you.
Well, gravity. Just use the tennis ball analogy and, think about it. Once I drop you out of a 10-story building, you're not going to immediately get up and walk away. You're pretty much going to crawl.
I think even if
you do get up and walk away, you're probably going to fall flat in your face again. So, in essence, what I just described was you need to base build, you need to stabilize. And when you get these big, wild, huge point runs back and forth, like we've seen, there's no stabilization there. So you like to see some stabilization. I would like to see a retest of those lows to see what it's made of. Now, we're either going to come back down and we're going to retest them and it's off to the races again, or, you could undercut them, and it would not surprise me to see a shake and bake shakeout low here. We call it a shake and bake. You break into a new low and get everybody all excited, all the short sellers, and then they get all shooken up emotionally, so they sell short, and then guess what? It isn't but a little bit later, the market bakes them by rolling back to the upside and stopping them out.
All right, we got
So
we got
that's kind of my scenario analysis in the short term.
All right, we have some traders here that have been playing PANW, Palo Alto Networks. Came out with some good earnings. The street really liked it here. We got a rally going. We hit 178 and change, I believe. Now we've backed off here. Still trading up quite a bit. Harlan, I don't know if I don't know if the circus is still in town on this one. What's your take on this one?
Well, look at where resistance is. You look at the before it fell apart and broke, let's say 172, early August. Before it fell apart, and then, that's a little support level there. But then when you look at the highs of, what is that, 178-ish?
Yeah.
Where it slides to come up to the 50-day moving average. That's kind of resistance. And here's where you're going to open up. You're going to open up at a resistance level and give or take right in the zone of the 50-day moving average. So we've seen typically when stocks break support or they break, like a 50-day moving average, much like when support is broken, old support once broken becomes new resistance. Same thing. Same thing with the 50-day moving average. So would I be a buyer here? Nope, not in this climate. If I owned it and I was smart enough to have traded it ahead of earnings, and I got the pop, I wouldn't be looking to gift horse in the mouth. I'd probably lock my gains and say, thank you very much.
Okay, we got
you really want to chase strength in this market.
Nope.
And, earnings-driven reactionary strength especially. Because how many times have we seen this in the last couple of days where, stocks will pop on earnings or something, and immediately they give it all right back.
All right, that's been.
So why would you want to mess with that? One in the hand truly is worth two in the bush.
All right, Rob Hood always enjoys your commentary on stocks that he's involved with, and love to get your take on this chart here. It's HEES. H&E Equipment. Harlan, what are you thinking here? Is this looking tasty? You buying that breakout? 2083, yesterday's high. 2085, your high on August 31st. 2074 close, flat in the pre-market. Also another high right in the $21 area. Back, another high at the 2080 area on June 29th, Harlan. What's your thought on HEES?
Well, what? I'll tell you what I like about it. For me, if you have to squint to see a chart pattern, it's not there. I mean, once you get good at, identifying chart patterns and chart pattern recognition, things should just jump out at you. So when I look at this chart, this is what and this will come into play down the road in the event that, when we can get some sort of a bottoming pattern in the market. Look at the end of July lows. I mean, it is just off the face of the cliff at the end of July. Then you get that big spike up. We call that a first thrust. And then what does it do? It pulls back off its highs, kind of supports down around 16, draw a line across those highs, and then when it surges higher, that's an awesome trade right there. If we see the markets do something like that, at some point in the near future, that's what it's going to take to get me, generally speaking, to lean long. But now, fast forward to now, here you see it bumping its head on that 21. It just keeps bumping its head on 21. Draw a line right across 21, and here you are. You're up into some overhead supply. And it's happening on negative relative strength divergence.
Right. So
not to mention, just above that, you got $22 a share is the 200-day moving average. So your upside is pretty limited.
I think I'm looking at this one too, and I see the bump that you're talking from 14 to 18, and then you had a consolidation. Then you had the bump from 16 to 20. I mean, I guess the real bullish scenario would be, hey, you found support at 18, you're going to 22. The way I look at this one is, I wouldn't want to see it red on the session. I want to see over 21, or that first 15-minute bracket, prove itself and keep on going. If not, you still have to respect it as resistance. How about another one here for you coming from Rob Hood in the chat? VA. Virgin America, that the airline that is holding up pretty here. What's your take on VA?
Well, a lot of big average daily range bars.
Mm-hmm.
Look at those average daily ranges. They're pretty wide and loose. So that's its chemical makeup. This is an issue that has a habit of putting in wide and loose, big average daily ranges. So you have to take that into consideration. I look at it, I see support right at 30, draw a line right across 30, and you can see May, June, and July. That thing, it just bottomed out. It's like I was saying, once you get dropped out of a 10-story building, you're going to, not get up and walk away. You're going to kind of gather your thoughts and your wits and base build. So that would be really healthy if we saw our whole markets do that over the next couple of months. But you'll notice off of that, late July surged up, and what did it do? It pulled right back down in that mid to late August, and then that was the support, and it worked its way up. Right now, I'm looking at an issue, in the face of fear at $30 a share, that was your trade because it was a retest of support. Now here, you're looking at it, it's just spitting distance from, 36 and resistance. So, if you're there and you're long and you get to 36, understand it's resistance. So, sell strength.
Yeah, looking at the daily on this one here, you did have some big bars here, closed near the low here. Just keeping an eye on 35.50 there, Rob Hood. 544, the low from yesterday in the close, and then the 2-day low at 551. Below that, you got a little bit of air down there to 34.90. Harley, gotta get your take on Apple here. I mean, it's had the bounce. It's showing excellent relative strength here. Still within striking distance of its recovery high. I'm sure it's trading below the 50 and the 200 day. Well, maybe not the 200 day. What's your take on Apple?
Well, pretty much it is the index. I mean, if you think about it. I mean, it literally mimics the index if you want to look at it that way, to a great degree. You got resistance up in that 114, 115. You got support in that, call it 103-ish zone. And all it did yesterday is it tried to retest, the highs from a couple of days ago, just like the S&P. And sure enough, market rolls over, Apple rolls over. Or shall we say Apple rolls over, the market rolls over, because it's such a huge percentage of the indexes that it has an impact. So right now, it's kind of in the middle of no man's land, just like you were talking about. There's a lot of that out there. And so when in doubt, stay out, look for support, ask yourself, what do I need to see to make me take a trade on the long side? And that, for me, that would be a retest of the lows, which to me is, I'm gonna peg, let's just say 103-ish. That spike down to 92. Is it live or is it Memorex? That's what we're all asking, isn't it?
Yep.
All of those big spikes. Well, to anybody who had a stop loss on the books, that crash day, if they got executed at those lows, to them, yeah, it was live. But we need to see. My gut says you're probably not going to come back down to that 92.5. So it's kind of like new servant spikes. They just they're there, and then they never look back at them. So, but for me, I want to see that 102.5, 103 support zone, which was some decent lows. I want to see that retested and defended. If we get it defended, and the same thing goes with the S&P. But so it's really a hard call. It's a conundrum, like everybody's been talking about. I don't know what to make of it either.
Okay, and Bobby Bid is talking. Apple leads the index or mimics the index. I mean, it's the top component. It makes up almost 4% of the index. It seems like, It's very rare days when you see a big green day and the SPOOs and Apple aren't green, or a big red day and they're both the same. So we'll be following them today. Apple, this 110 level is huge. We'll see if it can hold support there. Harlan, any other issues here? I know I like a lot of charts here. You hit a stock in an uptrend, pulls back to support, which was former resistance, kind of consolidates, a little cup and handle. Are you finding any of those, or just with the market activity we've had, they're just feeling?
Actually, I am. I'm
Okay.
finding a lot, but there's a caveat, and that is you need to invert all the charts. Now think about that.
Stand on your
If,
head and
if,
look on them? Is that what you mean?
well, look at it this way. It used to be buy support, sell resistance. Okay, that hasn't changed. Right now, though, we're looking for some support to be identified. So selling resistance still stands. So anytime you see strength and you come up to resistance, it's got to be sold. We're still looking for where is true support. I don't know where it is. When in doubt, stay out. The market's going to make the call. Just all you have to do is remain flexible and let these trades come to you. You have to have your game plan intact. And for me, it's all about finding out where support. Look for support levels. You want to watch those levels and see if you get some stabilization. You want to see the market react off of support levels. So now we just need to find out where they are, because, when you look at tons of charts out there, there's nothing but falling nice lows.
Harlan Pyan, co-founder, All About Trends, joining us this morning on Benzinga's Pre-Market Prep. Harlan, it's always great to speak to you. Have a good weekend, and we'll talk to you again soon.
Thank you much. Take care. See you later, guys.